I think last year was not the year of AI. I think last year was the year of chips. AI is still to come, and software is the next play on this. But like winners and losers during the internet era, we're gonna get winners and losers in the AI space as well.
There will be a moment where we get that correction, and I'm aiming for starting January, maybe late January, for finally getting the market into a weekly dip, multiple weeks, and that's what I've been doing. I've been putting some cash on the side in case there is a dip.
The risk worldwide is if it's gonna be a recession in certain parts of Europe and how that's gonna have a ripple effect on other countries. And then trade wars plus actual wars. I mean, trade wars with Trump and actual wars. I don't know. Now we have that escalation in Syria. I mean, after Gaza, after Ukraine. So that might be a serious risk.
As the year ends, the Christmas rally seems to be here. Yesterday we were a little bit scared, but today we seem to be rallying once again. The FOMC is meeting currently, and they're hoping to give us the rally of the year, or maybe Jerome Powell will become the Grinch. We truly don't know. We have gotten a ton of data, and the market seems to be paying attention closely, very, very closely. And the big question is, are we gonna continue the rally? Are we gonna see 2025 be the year that everybody continues to make 50-60% returns, or are we turning for the worst? We're gonna find out from Adamos, Timothy, and myself. So make sure you watch the whole episode, because we're gonna be talking about inflation, we're talking about interest rates, we're gonna be talking about Europe, Japan, and the United States. So make sure to stay. So let me tell you guys, what data right now are you paying attention to? Adamos, let me know what you got in mind. What is the thing that you're paying attention in your portfolio?
Okay, the thing that I'm paying attention, to be honest, I'm a long-term investor, so I mainly look at fundamentals of the companies. But doing that, I also look on macro data in order to assess where the economy is heading. Because, for example, inflation shows you whether there are going to be more Fed cuts or not, and how it will affect the economy. And this will affect the cyclical plays that I'm doing in my portfolio. Let's say, for example, I own Google, I own Amazon, which I believe are long-term companies. But few days ago, I sold a company called Skyline. It's Champion Homes, manufactured homes. And although interest rates are coming down, and this is going to be a tailwind for that company, I sold. It's contrarian, but I sold because I think the market already expects that. It expects that interest rates are falling down, so I don't think there is an upside. So the data that I'm looking, it's financials of the company as well as macro data, and mainly it's the inflation and the interest rates, where are heading, and what the Fed is doing. Beyond that, it's also Trump, the geopolitics. I mean, what is going to be the strategy of Trump, the policy. But I believe that's uncertain for now, except for tariffs, immigration, and all those policies. And I'm a bit worried what's going to happen, what decisions are going to be made. But I believe a bulletproof portfolio can stand those turbulences, volatilities, etc.
Yeah, definitely. I definitely agree. I think one of the biggest fear, uncertainty, and doubt that I have coming into January is what the Trump administration is going to prioritize for sure. Because we really don't know. We have an idea that crypto is going to be in the forefront. We have an idea that oil is going to be in the front in the desk. Like he's going to be paying attention to all those things. But the border is also there, so it's really hard to predict until we finally get there. And I think, like, I'm in the camp that we are going to be sitting in the sort of buy the rumor, sell the news, and we're going to get the reality of Trump when he gets into office, and then we're going to see the priority list, and I don't think the market's going to like it, because we're going to be worrying about the wrong thing. What do you think, Timothy? What are you paying attention to?
Yeah, so like Adamos, I'm a bit of a value investor for stocks. And if you look at the price history for the last couple of months, Stocks have been rising for multi-months after one, going up, up, up. And that means I haven't been buying a lot of stocks because I like to buy on dips. There's two stocks on my radar that have dropped a little bit, which are UNH. The CEO of United Health has been murdered, and that caused a big price drop. And also we have Adobe that posted good earnings but lower forecast, and this made also the price drop sharply. And those two are short-term risks, so nothing that concerns me. So the price drop is something for me to say, okay, I'm gonna step in and buy. But for the rest of the market, the S&P, the overall market, I am watching just for a correction in price, because it has been going up in a straight line, and we all know the markets don't go up in a straight line. There will be a moment where we get that correction, and I'm aiming for starting January, maybe late January, for finally getting the market into a weekly dip, multiple weeks. And that's what I've been doing. I've been putting some cash on the side in case there is a dip. And so that's actually what I'm watching, price of the market, but the data, not so much.
Closely. I'm a little bit against, because I'm paying very close attention to the data, just because right now I think I wouldn't say we have any red lights in the horizon, but we have yellow lights, right? So for example, one of the key important data last week was inflation. So we got CPI data from the States, and CPI data came in line. But that's not the thing that I was paying attention to. I was paying attention to the next day where the PPI came, the producer price index. And that came in way hotter than expected, which it's usually a leading indicator for the next CPI reading, and the Fed pays a lot of attention to this because input prices it can drive inflation upwards. And obviously a little bit of the Trump policies that he's talking about, like tariffs, could drive inflation upward. And I do believe that the Fed has a lot to do with the value of money and the cost of borrowing, right? So the higher it is to borrow money, the more likelihood it is that companies that are stranded for cash can go under, you know? It's that saying where Warren Buffett says, we don't know who's swimming naked until the tide pulls back.
The next year, I don't know what's going to happen with that. As a theme to look into 2025, I believe it's again AI, but it's not just AI, it's monetization of AI. And if we don't see that monetization, and like Adobe that Timothy mentioned, then we're gonna see huge drops in those companies. Then other thing that I believe it's gonna be a good position to look into, I mean, as an industry, it's the nuclear, because AI needs energy. Energy is expensive, and nuclear it is believed to be a cheaper source of energy and enough to support the AI needs. So, in my view, there might be a correction, but that doesn't mean that the market is going to be negative in the next year. And I look into AI and nuclear stocks.
Okay. So right now you're paying attention. I like the nuclear, but I think we're a little bit far away from seeing, because the problem is so much regulation and so much, so much bureaucratic tape. That's the problem that I have with it. But I do believe long term, if you're looking at a 2 to 5 year horizon, then yes, for sure. Timothy, what about you? What are you thinking we see in the markets?
Yeah, just a note on what Adamos said. We're already seeing Google, for example, buying companies that are into nuclear plants just to have the energy needed for their AI structure. So that was a good point, and we're already seeing the big tech putting positions for that. Now for next year, I believe it's not gonna be like this year. This year was really one big of a bull. We have to be modest and say this can't continue. Not to say that we are going into a bear market, but statistics also say that with a Republican president, the markets rally a bit less. And with Trump, that could be the case. This means for me nothing special. I'm just staying long stocks and buying dips in case we get them. Just like Adamos, I'm not doing much more besides trying to follow the market as it is. And in case there is a dip, I will buy more heavily.
No, the AI trade continues to to continues to bull on, I guess, because when you are at least the companies that I'm closely paying attention to is Palantir has had a crazy rally. I do think it's overvalued at levels like this, but again, the market might stay irrational longer than I might stay liquid, So I'm definitely not planning to short Palantir or Nvidia or the big names, But I agree with you that we're paying very close attention, and the whole market is as well, is to how we're going to see AI be incorporated into the business models of these major companies, right? Because for example, Adobe, one of the statistics that I was hearing was that Adobe has to now compete with many other companies that are incorporating AI in their base model, And Adobe is not charging more for AI products. They just have to build these AI products because it's now becoming an expected part of the business model and the product that you buy as a consumer, right? So all of a sudden, now you're seeing, I think their Adobe year-on-year growth is around 12% in revenue, but their expenses is growing at 19%. So all of a sudden, we're going to see that increase in costs for many different companies like Microsoft, companies like Meta, Amazon, because they have to invest, and we're going into that investment phase. I think last year was not the year of AI. I think last year was the year of chips. AI is still to come, and software is the next play on this. Like winners and losers during the internet era, we're gonna get winners and losers in the AI space as well. So that's my sort of outlook for 2025 is going to be the AI era, but software side. Chips are going to become more sort of standardized. There's going to be more competition starting to come in. And then energy. I think energy is going to be key. I'm paying attention to solar. I think solar is the base. Because when you hear the rhetoric from Trump, Trump hates wind. He hasn't said too much about solar. So something I'm paying very close attention to. I think solar is going to surprise next year. But well, let me tell you, now, talking about the other side, what are the risks do you guys see? Because right now, some of the risks that I'm paying attention to for 2025 is the decline of Europe, the decline of the UK, the decline of Japan, and the rest of the world seems to be doing a little bit more gloomy than America. What are your guys' thoughts on that?
Okay, there is worldwide are those that you mentioned. I mean, in Europe, we see problem growth across Europe is decelerating. In certain occasions, like UK, it's declining. So we see that there are issues in the market. Then on China, we know that there is the stimulus that was announced, but still there are no benefits, actual benefits in place. I mean, we haven't seen anything, right? The consumer spending more or something like this. So the risk worldwide is if it's going to be a recession in certain parts of Europe and how that's going to have a ripple effect on other countries. And then trade wars plus actual wars. I mean, trade wars with Trump and actual wars. I don't know. Now we have that escalation in Syria. I mean, after Gaza, after Ukraine. So that might be a serious risk. Okay, you cannot position your portfolio under a war scenario. Everyone's gonna be dead. So I'm just kidding. I mean, the war, if there is a war, I mean, you cannot position it. I mean, if it's a global war, that's the main risk that I see. Actual risk. The other risks are short term. We can survive those. And I mean, the portfolios are going to do well.
So you're thinking right now the biggest risk is like the black swan event would be a global war.
I hope so not, but I have my concerns.
But it's the one that
I
you're
have my
scared of.
concerns, yes.
Okay. Okay. Timothy, what are you looking
Just
at?
to add one point, on the other hand, I believe that Trump is not pro-war. I think that he might save the situation on that front.
I think he's gonna, there is a volatility that Trump brings to the table that I think people don't want to find out. Like he might just get angry enough and just all of a sudden, you know what? Let's try out and see what happens. The art of the deal. So yeah, I agree with you that it seems that Trump can hold those reins a little bit tighter than Biden could. So it's a matter of waiting and seeing. What about you, Timothy? What are you thinking the fears are heading forward into the year? The wall
Yeah.
of worry.
So the trade war is definitely something to pay attention. I mean, Trump is dominating with the putting more fees on place against other countries, and this could higher inflation, and that's a problem for companies if inflation gets out of hand again. And we've seen in 2022 what inflation has done to the markets, so that's definitely something we should pay attention. I live in Europe, and I have to say Europe is like the one always regulating, and I have a feeling they have to change their strategy because otherwise the economy here will become flat. I mean, there's no innovation, there's nothing exciting, and everything is going on in the US. They're stimulating companies to scale out, and it's just the opposite here in Europe. And that's why I prefer to invest in US stocks. And for Europe stocks, the only thing I can say is when the stock or the business has a monopoly, that's the reason for me to invest in, because when it's strong, it has a strong moat, it will be very hard for the competition to catch up. Like ASML, for example, that's a company I like, and Louis Vuitton, we have Hermes, both are like the number one within the luxury business. We know that will be difficult to deteriorate. So for Europe stocks or even China stocks, look for companies that are well established, have a wide moat, and difficult to get rid of. That's the only thing I'm watching for Europe.
Yeah, it's interesting because like I think even Japan is slowing down, China's slowing down, Europe's slowing down, the UK is slowing down. So the bigger players in the field are all slowing down. But America has one thing that the rest of the world doesn't have, which is the American dollar. They're able to print their own currency and they're able to put the debt on everybody else, or the burden of economic lowdown on everybody else, given the fact that they can just print and just invest, invest, invest. That's
I
why I
got a
like.
question for you, Nestor. Like, do you believe we will have a QE soon?
I think Trump's gonna try. I think Trump's gonna try, but I think the Fed is too scared of reigniting inflation. The thing is one of the theories I heard about QE is that Trump can actually do QE by allowing the regular, like by reducing the regulation of American banks, and all of a sudden they're able to lend more. They're able to maybe keep less reserves in their balance sheet, and that will be stimulating for the U.S. economy. Is a tool that that Trump has. So will he try? For sure. The thing is I do think that the Fed right now is a little bit scared of reigniting inflation, but the biggest reason for inflation during the COVID era was the fact that America was printing money like it was paper. It wasn't the fact that the cost of borrowing was cheap, but it was the fact that we printed tons of money and just put it into the economy willy-nilly. You know, that has its impacts, and it shows throughout, because all of a sudden, if we look at the money supply of the states, it has grown exponentially. And that is gonna bring inflation in asset prices, because if the price goes up and you still have, the same amount of resources, the prices is going to continue to go up. So that inflation is starting to come to a halt, given the fact that the Fed is doing, but it's something I think somewhere in the 70% of hedge fund managers are still scared of inflation. That is why CPI and PPI are still moving markets today, right? Whenever you get the results, people are paying very close attention, and the interest rate of the Fed is definitely something you must watch. But yeah, I do think that like there are policies that are coming that are inflationary, but I don't think like supply chains are better. The access to raw materials is getting better. China's still producing. They're not selling as much, which is telling you that there might be gluts coming up in the market of supplies and raw material. So, you know, I think like right now it's a matter of saying inflation could come back, but we also have to take into consideration that unemployment is going to be a lot worse, and finding that dual balance between those two, which the Fed is trying to do, is going to be key. But I don't think we get quantitative easing unless the US sees major unemployment tick up. But right now we're still at normal level. So I don't think it's something that I'm scared of just yet. It's ticking up. It's definitely something to watch out, but I don't think we're gonna get it just yet. And that's the reason I'm not going full on into small caps still. Like I'm paying close attention to the opportunities that there are, but I'm staying away from small caps because there's a lot of companies that their balance sheets just don't make any sense. That's where I'm at. That's where I'm at. I went in a little bit of rant there, but yeah. So cool. I think we've touched on most points. By the way, this episode is sponsored by us, so make sure you click that description down below and make sure you check out our portfolios and you follow us because we always are talking to the markets, giving you your thoughts, giving you our thoughts, and you can always look at our portfolios to see what we're buying, we're selling, and you can always copy us in eToro. So make sure you pay attention to as well. Anything else you guys wanna include? Well, make sure you like and subscribe. Yeah. Anything you guys want to add too?
Well, Adamos had one interesting question. We sent out in the chat. What's the last thing you bought? Just one sentence and that's it.
Shall I go first?
Yeah, please.
Okay, I bought yesterday Leslie's. It's a US retailer in the pool industry. The company is highly levered, so it's not my usual play, but I believe it's deeply undervalued. It is a market leader. Now it's prioritizing debt repayment versus acquiring new stores. So what I think that the market is missing is the expansion of margin in the near future and the multiple re-rating and the durability of that business. I mean, it's going to be there for the next 10, 20, 30 years.
What was the name of the
Leslie's.
company? Leslie's. Okay. I'll check it out for sure. Timothy.
Yeah. So it's quite funny. The last thing I bought was Fartcoin, and you can buy it on eToro. And it was not yesterday, but it has been going up lately, almost 1 billion in market cap, which is
It's so
insane.
crazy.
And
It's
also
gone up
why
100%. Like I saw it at 500 million. Wow.
yeah. So that's the reason why I think QE isn't gonna happen soon, man.
If it happens, it could just blow everything up. Like the last thing I bought yesterday. I was actually quite active yesterday. I saw the dip that we had, the de-risking that we had yesterday, and I bought some NVIDIA. No, actually, not even NVIDIA. I bought NVDL calls for Friday and January. And I'm up 212% on the calls tomorrow, and then I'm 67% on the January calls.
Well done.
Yeah. It's not bad. It's definitely gonna pay for my Christmas dinner. Santa's coming to town, baby. Santa's already here. Oh man, no, but yeah, like I don't know. I like to pay attention to, like, for example, economic data tends to freak out a lot of people, and a lot of people did risk just before major data without getting to know the outcome, and then all of a sudden it's like for example, today I'm live streaming the FOMC, and I bet you it's gonna come down a little bit, but then we're gonna go back up because he's gonna say the same thing he always says, which is we're gonna wait for the data to come. We're data dependent, and we're hoping that the market will tell us what to do. That's it. And then and then boom, money. It's crazy. Yeah. Nice. That was a good episode.
Did we close it? Okay, I didn't notice.
Well, let me know. Do you want to close? Thanks so much for watching. Stay tuned for more content. We're gonna try to do a once a week episode. Make sure to like and subscribe and market buzz.
All right.